Before, only banking organizations, governments, and investment funds were allowed to engage in currency speculation. However, Bitcoin is being offered to the general public as casino entertainment. Welcome to CryptoLink channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. December 7, 2022. Cointelegraph tweeted, "Is crypto now really just a casino?" Opinion by @RichSCannon. White-collar crime headlines frequently mentions crypto and fraud, and what's perhaps more concerning is that these unethical practices in the crypto industry are not restricted to a single type of criminal activity. These crimes, which involve real money and target cryptocurrency investors, are different and diverse yet share a similar thread. On a bigger scale, private equity, pension plans, and even nation-states are main investors and losers in the cryptocurrency market, where many people have invested their whole life savings. Some con artists will attempt to persuade their targets to invest in a quick money scheme that ends up being a Ponzi. Authorities said on November 21 that two Estonian nationals had been detained in connection with a $575 million Bitcoin fraud and money laundering conspiracy. The head trader of the massive cryptocurrency Ponzi scam Empires X also admitted guilt to conspiracy to conduct securities fraud in association with the robbery of $100 million from investors, according to news released by U.S. authorities in September. As fraudsters take advantage of the many chances for digital assets scams, the exposure of large frauds like Empires X has become common in the cryptocurrency market. Then there is the institutional risk, which refers to exchanges and platforms that first appear to be established and reliable but ultimately fail because they have holes in their balance sheets wherein client deposits ought to be. The industry, which was already struggling from the effects of the crypto winter that saw coin values crash across the board, has been devastated by the stunning recent fall of FTX. According to a petition in a United States bankruptcy court, the FTX owes its 50 major creditors approximately $3.1 billion, yet the ultimate cost of FTX's downfall is significantly greater in terms of the domino effect rippling through the sector. The role of authorities in FTX's capacity to fraudulently conduct on such a wide scale will face significant scrutiny moving ahead. To be fair to the Financial Conduct Authority or FCA of the UK, the organization did issue a warning in September indicating that it did think FTX might be offering financial products or services in the UK without approval. However, the announcement was limited to the FCA's website. Without taking additional steps to ensure that the warning reaches its intended audience, one must question the purpose of issuing such a notice. Although FTX's demise is a major one, it won't be the last of its kind. After FTX collapsed, a deputy governor from the Bank of England demanded that the industry be included in the regulatory framework and issued a warning that action needed to be taken quickly to avoid a shock worse than the collapse of FTX. While we welcome this call to arms, it is important to remember that enforcing laws effectively will reduce bad conduct and boost market confidence. The disruptive and Wild West characteristics of the crypto industry are used by proponents of the industry to pique public interest, yet it is precisely these characteristics that make the market so alluring to scammers and crooks. Since cryptocurrency is still largely outside the purview of domestic and international financial regulation, it serves as a haven for criminals and exposes investors to risk with little opportunity for legal action if they become victims of crime. Banks are withdrawing rather than forwarding to the industry. Recent constraints on customer cryptocurrency activity by Starling Bank are likely to drive crypto investors to less secure channels for transaction completion. Blockchains and cryptocurrencies have been labeled disruptive technologies because they operate in a decentralized environment. It could be foolish under these circumstances to criticize the procedures of the conventional financial system, which many criminal offenders have attempted to avoid. Both external education and user self-control are necessary. As IBC Group founder and commentator Mario Nawfal stated on Twitter in November that, "I am constantly being asked how we missed the FTX fraud. The simple answer is greed. We were also focused on making extra income that we neglected to exercise proper due diligence. We all followed one another, like sheep, hoping to avoid being the idiot who misses out.
What are you?
An idiot sandwich.
We are now making compensation for damages. Virtual currencies trading should not be viewed as nothing more than an extension of playing online games, but instead as a serious financial preference with genuine and risky consequences. The gamification of cryptocurrency has been made feasible by the fast growth of crypto and non-fungible tokens throughout social media, alongside celebrity endorsements and influencer marketing, normalizing the culture with minimal consideration for the possible drawbacks of investment. New investors are bombarded with silly stories as to how their colleagues created eye-watering gains from tiny stakes investments, and are easily deceived into pouring cash at the following get-rich-quick scheme becoming dangled before their eyes. Currency speculation was already repackaged and marketed to the people as casino entertainment, and its exponential growth indicates exactly how effective the makeover has been. A perfect storm has formed, combining brash social media posting, the mystery surrounding crypto, and the kind of extreme price volatility that encourages investors to dare to dream. Greed, technological advancements, and a lack of laws continue to be destructive. There is still a long way to go before history repeats itself, and fraud is now the cost of doing business in the cryptocurrency market. Exchanges must be governed and run like banks if they are managing customer funds in order to protect consumers. This includes having assurances in place and properly securing and siloing deposits. To ensure that investors are fully aware of the risks associated with investing, cryptocurrency must be subject to some sort of centralized certification process. Tokens must meet basic requirements and be supported by warranties in order to be certified. Consumers will have clear vision and therefore can make educated decisions. It's important to consider how coins and tokens are issued, and for regulation to be effective, there must be minimum requirements similar to those for initial public offerings. Valuation remains an issue. Corporations are releasing tokens in which the value depends on the prospects of the firm and thus are added to the value of the firm's own shares. FTX value was backed by the market price of its token FTT, and also the value of FTT itself was reliant on the pricing of FTX. The circularity here is worrisome. The crypto industry is currently at a turning point. The counterculture that places it at conflict with centralized power can only lead to further controversy, instability, and loss of trust. That's it for our today's video. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.